Check, please.
Welcome to Everything Money. It's Seth, Paul, and Mo. Paul, we've heard this term on YouTube, the old idea of a multi-bagger stock. And deep down, I talk to young investors and I ask, well, how do we find these really, really great deals? I think if you're thinking you have to YOLO your money into these new startup companies or these meme stocks to get a multi-bagger 10X, we would give you a different approach in this video about how a couple wealthy guys got even wealthier by finding really great trades over the years while avoiding a major downside risk and hype. I present to you Paul Gabriel, if you can wipe your board clean there, Paul, and tell me your thoughts on how multi-bagger stocks exist and how we can grab a hold of them, baby.
All right, guys, so a multi-bagger stock is a term that is used to describe a stock that's gone up several times. So for example, if you buy a stock at 10, it goes to 50, it's a 5-bagger because it went up 5 times. Very simple, nothing, you know, you don't need calculus to understand that. It's very simple. And the question becomes, how do you get that? Well, for one thing, compound interest, right? We always talk about compound interest. So as an example, let's say you buy a stock and it goes up 15% a year for 20 years. It has gone up 16.4 times. It's a 16-bagger. Okay, very simple. So just compound interest can help you out a ton. But how do you find these? So the example I always give is Alibaba. And the reason being is I'm buying Alibaba stock right now.
Me too, Mo as well.
We all love Alibaba stock. It's fallen in half since its high. And I think it's a very valuable company. So I go to our stock analyzer tool. This is a software we make for our business. It involves all the financials, all the 8 pillars. It does everything for you. But if you're interested in this, click the link below. But either way, I put in some assumptions for the company.
This is Alibaba.
This is Alibaba. Growth rates, which is lower than the last 5 years, significantly lower. Assumptions on profit margin, PE ratios, free cash flow, and returns. And I'm going to say 10% is what the market should sell for, so I want a 10% return on my money. I hit analyze. And let's go to the high side. It's saying today I should be willing to pay $680 for the stock. And I did a 10-year analysis. So what does that mean the stock is worth in 10 years? Well, at 10% a year for 10 years, and it's $660 being paid today, it's a $1,700 stock in 10 years, according to my numbers here, if all my assumptions hit.
Wow, the current price is $165, Paul.
$165. So I divide by 165, and it's a 10-bagger. Okay? So the best way to get a multi-bagger is to buy a company at a much lower price than it's worth today. Because in and of itself, if you buy it for half the price you think it's worth today, that's a 2-bagger right there. Because if you do it across a portfolio of 30 or 40 stocks, you'll get that. So that is the whole idea of how you find a multi-bagger. Find a stock selling to a massive discount to your value today. You can use our stock analyzer tool to help you with that. It'll help you find these stocks, and then you let time take its course. If you let time happen, you let Alibaba, listen, look at it this way. If Alibaba does 30% growth a year for the next 10 years, 973, again, 10% for 10 years times 973, $2,500 divided by 165, it's a 15-bagger. Let's say you hold the company for 20 years. Now at 20 years, you're not going to get this kind of growth rate. Let's say you get 10%, let's say you get 8, 10, and 12% growth for 20 years. Analyze this. $396 for the stock today, but guess what? 10% for 20 years times 396, it's a $2,700 stock. Much lower growth rate, but the point is you're still getting a 15-bagger by doing that.
Mo, I didn't think he was going to go this route.
What route do you think I was going to go?
Because won't you think, Mo, that young people think I need to get that 10-bagger that's going to go up this week or year or month?
It's funny. I mean, I've said it on videos before. The way we look at things, we look a decade out, not 10 days out. So 10 baggers, for them to happen, in majority of cases, are not going to be next week. I'm sorry, it's just not going to happen.
Tesla did a 7-bagger in the last year. You're wrong.
Yeah, so I was wrong about that one.
That face, Paul.
It's in a disgusting face. I'm more disgusted by what people say about Tesla, but go ahead, Mo.
Maybe that's why I can't sleep every night, because I'm so sad I missed out on it.
No FOMO.
I mean, that's just it, Paul. Like, this sounds like a long time to 10X.
It is.
Why wouldn't I just...
But you have to think, your investing life is a long time. Okay, so let's say you make a 10-bagger.
Repeat that.
Your investing life is a long time. Let's say you make a 10-bagger today. Okay, sweet. You got really lucky. You're going to go and try to make a 10-bagger tomorrow, and you're going to lose your ass. Then you're going to say, well, I need to compensate for that. So you're going to go make a 10-bagger the next day. You're going to lose your ass again. Then you're just going to keep getting in the hole. Then you're going to say, investing is a scam. I'm done here.
So
then you're going to go give your money to a money manager, and you're going to retire with $200,000, and you're going to have to, your kids are going to have to take care of you because hopefully they're smarter than you.
That's a sad reality, I think, for
But
a lot
it's true.
of
It is for a lot of people.
We love this book called Psychology of Money. And if you join our software, you can get part of our book club. We just talk about the book. In it, the guy focuses on one thing and one thing only, time. To be a good investor, you just need time. That's it.
Yeah.
If you just have time, you win. Warren Buffett was worth $3.5 billion at the age of 65. He's now worth $88 billion 25 years later. Now, it's still an exorbitant amount of money either way, but he made 95% of his net worth in the last 25 years of his lifetime. Right? He just had time. He started when he was 11. He's now 91, 92, whatever he's at. He's had 80 years of investing. If you do average rates of return, but over long periods of time, you'll do great. You'll get the multi-baggers.
And those of you, we've talked about it a couple of videos, those of you that are 40 and you feel like you've missed out on 20 years, you still have 30 years left to do this. 30 years is a very long time. You don't need to go and just try to get these quick multi-baggers. You still have 30 years to do so.
So let's use our software and do the retirement calculator so we can show people what that's like. Let's say you're 30, you want to retire at 70, which I do think, let's call it 65. Your current savings is $50,000 and you're saving $12,000 a year. You're going to increase your annual savings by 3%. You're going to get returns of very adequate 8%, nothing crazy. And during retirement, you're going to get 6% return. And you're going to live to 100. Inflation is going to be 3%. And your current income is $75,000 a year. And you want to live the same kind of lifestyle. You actually need to save more. So let's just save it to, let's put you at 68 to retire, just to make it easier. And so instead of increasing your savings, you have enough. Look at this. Here's your end balance at the end of the years. Age 30. Oh, why did we start at age 30? That's fine. $66,000. Now watch that number in the right column. It's not growing a ton, but all of a sudden you scroll down and all of a sudden you have $5 million. But look at this, age 68, you have $5 million. Age 58, you have $2 million. You went up 2.5 times in that next 10-year period. Why? Because of time and compounded interest.
Yep.
It took you 28 years to get to $2.5 million.
And then 10.
And then 10 years to get to 5. That's the point, guys. Multi-baggers happen because you buy stocks at low prices and you let time take its course. That's why you buy companies with high returns on invested capital and it discounts to what they're selling for because everybody thinks it's a bad company or they're missing something. That is the point of all of this. Time will heal all and it'll give you your multi-baggers. You just got to be patient for it. Buy good companies at good prices and let them ride. That's been Warren Buffett's mantra since he met Charlie Munger. Buy good companies at fair prices and you will do very, very well.
You know, to bring back home to, I think what normal people do, you know, is I tell folks, like, think about those old dads in your life that have 10 real estate properties, Mo, or some old business, and they're real flossing, they're golfing, they're smoking cigars nowadays, and I would think very few of them YOLO'd their money on a huge bet.
Correct.
It just takes a long time.
Correct.
And constant discipline to, I guess that's my goal, Paul, is to be one of those old dads that's got like
Well, you know how you
30
do that?
units of real estate.
How many times have we talk about one property a year?
Yeah.
You invest 25 grand in one property a year, 30 years later, you have $10 million in net worth.
Yeah, that's it. It's the get rich slow scheme.
It's unfortunate. It sucks. Listen, I like to get rich. I used to want to get rich fast. Now I'm like, no, I'd rather have just slow and steady. I know it sounds like a lot still, but I want to make 12 to 13% a year, and I can. But 12 to 13% a year is not going. It's not 1,200% a year. It's not 120% a year. That's what most people want. I'm great with 12 or 13% a year.
If this style of investing resonates with you, you can join our community at everythingmoney.com. You get access to the software behind Paul, not only the financial financial software, but the retirement calculator, stock analyzer, and more to come this year. We're giving away a Tesla at 100,000 subscribers, which is happening so soon, Paul. It'll be a great day when that occurs. Just in
35 days away at most, probably.
That's it. Thanks for watching. If you want to trade with Mo, join our community as well in the Bidness Nation. And we will see you next video. Fondle that thumbs up on the way out. See you next time, guys.